Good evening and welcome to tonight's session of the Covered Options Online Learning Club. As always, I'm Paul Madison. I'm your host for the Cool Club. If you are interested in writing to me, you can write at the Cool Club discussion list, which is coolclub@bivio.com. New little disclaimer I wanted to throw out, and this will be in all of the presentations from this point forward. Just want to remind people that options do involve risk and aren't not suitable for all investors. All investment club members and individual investors should understand the risks of any form of trading or investing. To learn more about options, we recommend visiting the Options Learning Center at the CBOE. To learn about stocks, you can visit lots of places, including the Investor Education area of the NASD. Just a reminder what these sessions are about. These are roughly 30-minute sessions, a little longer with Q&A at the ends, where we explore the thought processes associated with actual covered option trades. Most sessions we will walk through one or two trades from the recent past, going through the logic on why we were looking at a particular option on a particular stock, and we'll look at both when the trades are put on, and we'll come back and look again at them when they are closed. Some weeks, like tonight, will be more tools-oriented rather than trades. Our upcoming schedule, we do have a holiday next week, not a federal one, but a Cool Club one. So we won't meet next Wednesday, but we'll restart again right after Labor Day, September 5th. First Wednesday at 5 p.m. and then our normal time schedule for each of the Wednesdays in September. Again, we're continuing to build out our Cool Club homepage. It can be found at bivio.com/cool_club. Both handouts and recordings are under the presentations link. If you want to join the email discussion list, you can click on the Cool Club discussion list link. If you go to the resources and tools, you can get the cool tools like we are discussing tonight. And finally, the link on the right-hand side, meeting dates and times, is where you can get the schedule and registration links for all of our Cool Club sessions. Tonight, we're going to do a quick cash secured put refresher, and then we're going to present the new cash secured put cool tool and follow that with working through some examples, one on COH, and we'll try and do a few. There were several recommendations of stocks we could look at in the Cool Club discussion list, and I've picked a few of those. We aren't going to have time probably to do all of them though. With that, let's go into our little quick refresher on cash secured puts. But before we talk about the puts, I wanted to talk about some generalities on covered options. Covered options are a little different mindset than what we are used to when we buy stock, and it's something that is really hard for people when they start doing covered options, is that the fact that you have to think about them differently. When we're dealing with stock, we always start by buying first, and then at some point we sell, although some of us never seem to get to that sell side. But normally that's the progression. We buy and then we sell. When we are doing covered options, we have to think backwards. We start by first selling, and then we might close it by buying. Of course, there are other ways that we could close it as well, like if the option expires worthless or if it was exercised. But often it's the case that we are going to buy it back to close it. So again, it's important to remember we sell first. So that means whenever you're starting or opening a trade, what we want to do to begin with is a sell to open. And you need to make sure this is the action that you are selecting. I've had two recent instances where students on their first non-chaperoned trade, they both did a buy to open rather than a sell to open. And of course, they had radically different results with those. Fortunately, both students were using the virtual trading system, and so it was easier to swallow the paper losses rather than real losses. But I just want to encourage you to remember what we're doing when we're doing covered options is the first action on the option is always sell to open. For those of you who have seen my presentation on covered options, the longer one, there is a recording of this on the Cool Club, I like to think of covered options as another way to do fundamental trades. So the last few weeks we've been talking about covered calls, and we know that calls can turn into sells. Well, this week we're talking about cash secured puts, and puts can turn into buys, and that's just a little mnemonic to kind of help us remember that. And kind of real quickly, so calls can turn into sells, and puts can turn into buys. And that's just a nice reminder to you on, if you're trying to sell your stock, it's calls you're going to be trying to do. If you're looking at buying a stock, then it's puts that you're going to be doing. So as we have talked about in other sessions, when we are thinking about selling a cash secured put, the reason we might be doing this is maybe the stock that we're interested in buying has been correcting a bit, but even though it's corrected, it's not quite down to our buy level. But even though it's not down to our buy level, the next piece is that we may be afraid that it's about ready to bottom and go up even though it hasn't reached our buy. Well, selling a cash secured put is a way for us to generate some income on your cash that you have ready to buy the stock while you're waiting for that opportunity to buy it at a price below your buy price. To get ready to sell a cash secured put, we will need enough cash to buy 100 shares per contract. We need to know the maximum buy price for the stock, as that's going to set the ceiling on what strikes we want to do. And again, I recommend when you're first doing options that you stick with doing the front month expirations. And finally, I recommend selling as far out of the money as reasonable. Reasonable meaning that you get a good return for putting the option on. And of course, the Cool tool is a way to help you evaluate whether you're getting a reasonable return or not. Let's see, Lori, at this point, do we have any questions?
There was just one comment by Itana that apparently, maybe she did this, if you make a mistake and buy to open and you immediately call your broker, they'll guide you out of your mistake and you can immediately sell to close. So I've asked her if there's commissions involved with that happening, but it sounds like maybe you can call them and they can work you out of it if you happen to do it and figure that out right away.
Well, that's a great point. For both of my students who did in the virtual trading simulator, they both did close right away with a sell to close as well. With the simulator, it actually cost them a little bit of money, and I think both cases they were under $50, maybe $30 to $50. And maybe Atana's right, talking to the brokers to tell them if you did something wrong, they might reverse it without any charge or very little cost. So
yeah, I guess she said she might have only had one commission, or but she thinks they helped her out without any.
So that's a good point. But the even better thing is, before you ever hit that button, make sure that the action always is a sell to open, and verify that before you hit the submit order. Well, great. Let's move on and talk about our new cash secured put Cool tool. Reminder, all the Cool tools are Excel spreadsheets. They are Windows Excels, and they are saved in Excel 97 to 2003 file formats, but they'll work with the newer versions of Excel as well. And as I mentioned before, right now the tools currently do not work on Mac OS X Excel, but they could be run on a Mac that's capable of running Windows through Boot Camp or Parallels or VMware's Fusion, something that emulates Windows. And then, of course, you need a copy of Excel for Windows to make that work. On a native Mac, they currently do not run, and we'll continue to see if there's a way we can get around that. The current version of both Cool tools, puts and calls, is version 2.04. And you can see what version you're running is in light gray at the upper right-hand corner of each sheet of the tool. And if your current sheets have a version lower than 2.04, then you don't have the latest. And you might want to go out to the Cool Club page and download the latest version. And there is an updated version of the Covered Calls Cool tool as well that is also 2.04. And again, under Excel's security, you'll need to make sure that you allow macros. There's a couple macros now. There's one for resetting things, and then there's all of the buttons that I've put in also run macros to go out to websites and or switch pages. You'll also need to enable all the data connections because it does use MSN quotes. When you download the spreadsheet, the first page will always be a Getting Started page. This has a little bit of information about the Cool tool, and it's also where you would input the information about your particular broker's commission schedule. I know there was some confusion last week. The previous version of the tool, you could change the commissions right on the page where you're entering your details on your option. Now, to change the commissions, you have to go to the Getting Started page. That's the only place you can change it, and then that'll get reflected on the pages where you do either your sell to open or you're closing the option. You can see on the Getting Started page there's also a few new buttons. There's a go to the sell to open page, go to the closing the option page or sheet, and there isn't even a button now where you can click and go out to the Cool Club homepage. As we talked about the last 2 weeks, if you go to the Resources and Tools page of Cool Club, that's where you can download the tools, and I've got them highlighted there, and they're on the right-hand side under Cool Tools. And there's also links there that'll take you to presentations like the one we're doing tonight. So once we have a recording of this, there'll be another link for tonight's session where it talks about the tool and how to use the tools. You don't have to look for those in the presentation list. They'll be right there next to the tools. Well, let's go play. I guess before we go, just a reminder, as I'm talking through trades, they are just for education purposes only. I'm not making recommendations to buy or sell stock or to sell or buy options. And as normal, I would encourage you before investing in anything that you either consult a professional or do you do your own research. A little caveat. With that, let's bring up the tool. All right, we do start up on the Getting Started page. And as I said, this is where we can change our commissions. And the ones I've loaded here, $14.95 base commission, that cover 1 to 10 contracts, and contracts beyond the base of $1.50, and then an assignment fee of $14.95. These reflect the commissions that are used in the Options Industry Council's virtual trading system. You'll definitely want to update these to match the broker you are with. So, for instance, if you were with Fidelity, you'd be looking at $7.95. You'd have no contracts in the base. The assignment fee would also be $7.95, a normal stock trade, and the cost per contract would be 75 cents. And once you do that once and save it, then it's there every time you open the sheet. But for now, let's go back and just use what was already in there for the virtual trading system. As I said in the overview, we've got a few buttons. For instance, if we click on Go There, up pops the Cool Club homepage. If you close that browser window, which will close all tabs, so if you have other tabs open, you may not want to do that. But if you do, then you're right back into the spreadsheet. And that's a nice place where we can then go ahead and click on the button to go to Sell to Open. So here is the new cash secured put tool. And you start, if there's any data in it, you of course can hit the clear data button and that'll clear anything that's in the sheet. And I'm going to start with COH as my first example. It'll go out and get the quote for COH, and we can see it's a little over $55 and it was up 72 cents today. Every one of these little gray buttons is a link that will take you out to help you with your decision-making process. So the first question is, has the stock gone down for a while? I can click the button. It takes me out to Yahoo Finance, and I get a chart that shows me, and the time period that I've selected in the spreadsheet is 3 months. So it'll give me a 3-month graph. And it is just a line graph, so those are the closes for each day. And there is a simple moving average, 50-day moving average, which to me is a nice indication of has it been moving down for a while. And you can see in COH's case, yes indeed, our price has been moving down for the last 3 months. So I'm going to close this. I'm back to the spreadsheet, and I'm going to say, yep, I do think COH has been going down for a while. Is the stock down on the day? Well, obviously I can look up here and see that, at this particular time it's positive, but if I want to kind of see what it's doing for the whole day, again, I can click on my link, and now I get a COH stock chart. Instead of being 3 months, it's a 1-day chart, and on these charts, the red line is the even with the day before. So you can see all day today, COH was to the positive, or almost all day. There was a short period right around noon where it was slightly negative, but for most of the day it was positive. So I go back and say, no, the stock wasn't down on the day. And then there's just a little reminder that, in general, you're going to be a little more optimum if you're selling a put on a day that the stock is actually down. That doesn't mean you can't do it today. It just says from an optimum standpoint it'd be better if it was. Next question, is the market down on the day? Again, we can click the link. It runs us out, gives us a chart for the spiders for the day. And kind of a mixed bag. Most of the day it was negative, and then in kind of the last hour and a half it turned slightly positive. It's a tough question to answer, but is the market down on the day? Since it finally ended up positive on the day, I'm going to say no. Oops. I said no and I put a yes. And again, it's just a little reminder that in general the premiums are going to be better if the market's down as well as the stock. Again, doesn't mean you can't do it, just means it isn't maybe optimum. Now we have to say how much cash do we have available. In this particular case, I'm going to say that I have $5,300. Ooh, it says may not have enough cash. And this test is just looking at whether I have enough 100 shares to buy at the current price at COH, and I don't, because I'd need $5,500. But let's go ahead and leave that in, because I might be using a strike price that's lower than that $55. And in this case, my particular maximum buy price for COH, when I do my fundamentals and I use a growth rate, my longer term growth rate's about 12%. But I have some short-term concerns, and so I think over the next year I think growth might be even a little lower, so I'm going to use 10%, and when I do, my short-term buy target is 58. And just a reminder, that sets my maximum strike price ceiling. Do I feel like the price will go up? Yes, I kind of feel like COH is bottoming, and somewhere in here is going to catch and start going up. So yes, I do feel that's true. And the next question is the earnings date. I can click on my link. It'll take me out. And it says October 22nd is my earnings announcement. So that's what I needed. And I can put in October 22nd. Flips us over to this analyzing our selection. But first, at the top, we get some choices around what kind of premiums I'd recommend looking for, minimum premiums that I'd look for. On the bid side, I'm looking for the bid side because those are the best buyers, and I am a seller. So I just want to look for bids that are above these. And a reminder that I said 58 was my max buy price, so I want to look for strikes below that. Again, we have a new little link, a little button, option chain. I can click on that. This will take us out to Yahoo Finance. These are delayed quotes, so you can't rely on them for real time, but they give you a feeling for what's going on. They're 15 to 20 minutes delayed. When the chain comes up, do remember that the top of the chain on Yahoo is calls, and in this particular case we want to be looking at puts, so we have to scroll down to the put section. And this is where I can start looking at what's available. And I see the bid at the end of the day on the 55s was $2, and on the 52.50 was $1.05. So what I decided was I was going to look at the $52.50, and this is for September 22nd. And I decided this is where I put my order in earlier today, was at a $1.25. And how many contracts? I'm going to say 1. And notice now my little flag over here on my cash has disappeared, and that's because I do in fact have enough cash to cover buying 100 shares at $52.50. So I'm no longer flagged that I don't have enough cash. And I see my $1.25 that I'm going to put in as a limit order. Gives me an APR 23%. And my net premium collected after paying commissions is $110. In the screenshot I have here, you can't, the only thing that is rolling off the screen a little bit is the commissions, but they are over to the side just as a reminder. And if you had forgot to change them, you can click the commissions button and it'll take you back to the getting started page where you can change it, and then click to go back to the cell to open. So that was my COH example. Any questions at this point, Lori?
Yeah, there was a couple. One was, why do you think that the price will go up by the September expiration? Are there some sort of signs of a turnaround that you're seeing?
That's a judgment call that you have to make, and you can make it based on, when you know a stock fairly well that you've been watching for a while, you can kind of get used to the trading ranges it has. So it can be just a gut feel on trading range. If you're into technical analysis, then the technical analysis may in fact be giving you indications that it's bottoming and getting close to turning. So that's totally, there is no magic answer that unequivocally you know that to be the case. It is just based on feel and or technical analysis or both. In my case, I feel like COH has been going down, but it feels like it's catching in here. It actually got below 50. Let's see if we go back to our chart. Yeah, back at the right at the end of July, it dipped just below 50, and it looked to me like it found support in here and popped back up. And it just seems like this 55 level is providing a support area. Now, I may be wrong. You know, next week it may go down another $5, break through the 50, and then keep on going down. So I can't guarantee that it's bottoming in here, but it feels to me like that it's starting to find support and bottom and eventually will turn. Do I know that it'll happen before September? No, I'm not saying that I know that unequivocally. I'm just saying it's my feel that sometime in the next short period of time it might turn.
Also, Paul, there's a question about the terminology shorting things when you're talking about options. Do you want to just clarify that a little bit?
Yeah, I know as fundamental investors we hear the word shorting and we get a little anxious because we don't like to short, but selling a covered option technically is viewed as shorting, but it doesn't require margin because in this case, yes, we have shorted the option. That just means we sell it first, but we call them covered options because in the case of a put, we have secured the option with cash, or in the case of a call, we have covered the call with our stock. And so both cases, either the cash or the stock, keeps us from having to have any kind of margin account to be able to do the short. But yes, technically, selling to open, that is viewed as shorting that option. So I hope that helps.
Great. If the gain from your potential sale of the option combined with the strike price get you down to your desired target price after commissions, would you recommend going for it even if it is in or nearly in the money?
That's a personal preference, and I can't say that unequivocally, yes, I do that every time, but have I done it? Yes. I think it's an effective strategy. Some stocks are particularly hard to find periods when they actually get to what we consider a good value to our buy zone, and sometimes I'll be a little more aggressive in how I try and capture a buy that's close enough to my buy zone or slightly in it. So a strategy of expiration, or excuse me, a strike that is at the money or just barely out of the money, plus a premium that puts me into the strike is an effective strategy. I don't have any problem with that.
There's a question of what your buy price is for COH.
And that's the $58 that I have. My maximum buy price is $58. So technically, I'm already in my buy zone. And as I talk about in my bigger covered options session, if something is just barely crossed in the buy zone, I may want to optimize it and try and get a little better price, and I will be selling puts to do that. If my buy zone was $58 and COH was down to $40 and I really felt like it had bottomed, I probably would not even mess with selling puts. I would just do an outright buy because I would consider that a very good buy, and I just want to get it done. When stocks are just close to or above a buy, that's when I like to sell puts to try and stretch it down into the buy zone or optimize, get a little better buy. So in this particular case, yes, technically COH is below my buy, so I could just be doing an outright buy, but because I also have a little bit of concern over COH for the next couple quarters, I don't mind trying to optimize that buy and try and get a little better buy price.
Dan House is asking if you have a minimum APR for selling puts.
I use the same minimum that I use on the calls. I try and get APRs that are 20% or better. And the minimum premiums that you're seeing up in Section 2 are based on getting a 20% APR. They make an assumption that you're only doing one contract and calculate the minimum bids that you need to be seeing. So if I go and put in $1.09 here, which is what's coming from above, you see the APR would calculate to be 20%. Same rules on the puts as on the calls. I like 20%. Same rule around, I really prefer to collect $100 or more. So if I was only selling $1.09 because of my commissions, I'm going to be collecting less than $100. Not a lot, but a little less than $100. So it's just a little bit of a red flag that I would encourage you to try and shoot for more than that. Again, the only reason I do that is try and minimize how much of my premium gains are eaten up in commissions on a percentage basis.
Paul, Denise was asking where you got, can you go through again where you got the $1.25 premium?
Let's see. Yeah, in fact, that's a great lead-in. Let's go back to the PowerPoint for a second, because in the PowerPoint I've done some screenshots from the COH example, and what I was going to show you is these are from earlier in the day when I was putting this trade on. So you can see this was around noon, and the reason I'm doing this is now when we look at the puts, we notice that when I was looking at it around 1 o'clock this afternoon, the bids were at 120 to 130. Last trade was 125, and so the trade I actually put in, and I didn't even get a chance to go check to see if it was filled this afternoon, but what I put in, and here's when I looked at the option chain on the virtual trading system. So the 5250 was bid at 115, ask at 125, last at 125. And so when I put the trade in, I did a sell to open one at $1.25, and that's because that was the best ask at that point. Obviously, they weren't quite as strong of prices at the end of the day, so there's probably a good chance I didn't get filled on this order, and I'll have to look at it again tomorrow. I put these slides in just so that when you go through the PowerPoint, you could also see examples of walking through the COH in the tool. And before we work through a few more examples, let's just go back, and I wanted to mention that as a homework assignment, there isn't a posting for this. And again, there are no grades. But I encourage you to try this with the virtual trading system, because that's one of the best ways to learn this stuff is to actually go out and do it. And so I would encourage as many people as possible to try selling a cash secured put. So in this case, you don't need to have any stock in the virtual trading system. You just need cash, and they give you some cash to begin with, like $25,000. The Disney homework that we worked a couple weeks ago has a detailed instructions on how to sign up the virtual trading system. So if you haven't done that, you can still download that homework assignment and walk through the how to get started with the VTS. But what I wanted to use as a assignment was to sell a cash secured put on one of these 4 stocks. So FAST, which is Fastenal, PNRA, which is Panera, ORLY, which is O'Reilly, and ALGN, which is Align Technology. So you can play and decide which one you want to do, and you can do more than one if you want as well. And I encourage you to try it and share your results with the discussion list. So send it to cool_club, provide the details. So your fundamentals, kind of what your growth projections for the company are, where you'd consider a good buy target, then what strike and expiration you ended up selling, what your net premium collected, and what day you did it on, and what your APR was. And the Cool tool will help you with all of that. Before we go back and work through a few more stocks that came in from the discussion list, I just wanted to remind everybody that that says next week, but it should say the next Cool Club session will be September 5th, and it will be at 5 p.m. And we'll be looking at the buy to close side of cash secured puts, not calls. I obviously didn't work that slide hard enough, sorry. All right, let's go back to our tool. We can clear our data, and we have some great stocks that came in from the discussion list. Susan sent several in. I would say on Susan's, on a lot of them, the current prices were quite a bit above her buy zones. For instance, Alexion Pharma. Current price is around, it's over $100, and her buy target is $65. When you see that kind of discrepancy, you're not going to get to your buy zones doing cash secured puts. Cash secured puts are for when a stock is much closer to your buy zone, within maybe $5 or $10 at the most, and some of that's a function of what. Obviously, $10 on Apple's quite a bit different than $10 on O'Reilly. So depends on what the absolute stock price level is too. But we're talking about when the stock price is within 5%, 10% of your buy zone, not when it's 25, 30, 40% away. So the one that Susan submitted that was somewhat close was Carbos Ceramics, ticker CRR. So we can put that into the tool, and we can say, has the stock gone down for a while? So we go out and look at our chart, and sure enough, for the last 3 months, there's been a trend down in price. So yeah. That to me says it looks like it's been going down for a while. Is the stock down on the day? We can see that looking right up there it is. We could go look at the daily chart, but I'm going to skip that right now. Is the market down on the day? We know that from before that it wasn't. How much cash? Oh, I'm going to say I've got 7,500. Susan's particular buy price was 65. Feel like the price will go up. Yeah, I think that looked like it might have been putting in a bit of a bottom. Next earnings date is October 22nd. And so it tells us what kind of premiums we should look for. Now let's pop out and look at our option chain. Remember, we're trying to do puts, and calls come up first, so we got to scroll down to get to the puts. And so we see that the $65 strike has a bid of $1.05, an ask of $1.30. So we can go back to our tool, and this was telling us we needed $1.36. So 65, expiration of September 22nd. We put the $1.30 premium in one contract, and yeah, it confirms I'm slightly below the 20%. Now again, that's where it's your discretion. You may decide in this particular case you're happy to accept a 19% APR. Or you may say, well, I'm going to try and put my ask in at a little bit higher, 140, see if I can't wait for a point in the market where I can get a little bit more money for that. Or the other option, let's go back out to our option chain, is to look at, and in this case, CRR only trades in $5 increments, so I'd have to go all the way up to a $70, and a $70, the ask is at $310, the bid is at $265, so let's go try putting a 70 in and a 265, and we see, okay, that's a really nice APR, that's 41%, and so if I was Susan, then I'd have to ask myself, yes, my buy price is 65, how firm am I on that? Would I be willing to buy, if I had this stock put to me, it would be $70 less the premium, so less $2.65. So I'd be buying for $67.50 roughly after paying commissions. And I don't know how strong she feels about her buy price at 65, but that's the kind of exercise you'd be looking at. Is trying to decide, do I want to do a 65 and try and put the premium in at a little higher than the current level, and then I'd be buying at under $64, $63.70 kind of range after commissions. Let's see, maybe we've got time for at least one more. Itana had sent in Ross Stores, which is R-O-S-T, and has the stock gone down for a while? And in fact, in this case, it hasn't. It's been going up. Is the stock down on the day? Well, again, we can see, no, it wasn't. At least at the end of the day, it was slightly up. Is the market down on the day? No. How much cash do I have available? I'm going to assume I might have $7,000. What's my maximum buy price? Itana didn't give me buy zones, but let's see, using the Zach's growth rate of 13.5%, my buy target would be right at the $70, kind of where it currently is. Feel like the price will go up. Well, yeah, it hasn't been going down, so it feels like it probably is still moving up. Next earnings date is November 15th. We can go look at our option chain. We got calls on top. We want to go down to puts. So we can see a $70 put for September, bid at 220, ask at 230. I may have that a little tight. I'll probably fix that. That says you'd be getting a pretty decent premium, $200, and the APR is 35%. So it's up to you to decide whether you want to go ahead and do it. These red flags just try and kind of remind you that it may not be an optimum time, that you're better off if you're doing it after the stock has been going down for a while, and if the stock's down on the day, and if the market's down. That doesn't mean you can't do it today, and sometimes it's still extremely profitable, but this is just a little bit of a caution that there may be better times.
I was just wondering whether it might be good to remind people that as the price of the stock goes up, the premium is going to go down in the case of a put.
That's great. That's exactly right. Put premiums go in the opposite direction as the underlying stock. So if the stock's going up, put premiums will go down. If the stock is going down, then put premiums will go up. That's opposite of calls. Calls work in the same direction of the stock. Call premiums will go up when the stock goes up, and call premiums will go down as the stock goes down. So, great point.
That's kind of the reasoning behind some of your little red caveats there.
Exactly. And we've walked through a few of them, and we're getting close to an hour. I guess I'd throw the floor open for any other general questions besides going through more examples.
The question, at what price would it be appropriate to do the buy to close for Rost? I don't know if you want to get into that, or
we can walk through it real quick. So if we sold that same one September 22nd, $70, $2.20 premium, one contract, and we sold it today, which is $8.22. Well, today's maximum premium would be like 44 cents. This will change every day because at least early in the contract's time, it's going to be connected to time. At some point, it hits a floor that's essentially 20% of the original premium. Although it looks like maybe it's already hit that. It looks like, you know, for the rest of this time, it probably would be about 45 cents. Any other questions? If not, we're past our 30 minutes by ways, and maybe a good time to wrap it up. I appreciate everybody coming and hope to see you in a couple weeks for the next session.